Hello and welcome to Crypto Weeklies. Today in this video we'll be analyzing everything related to Bitcoin, conduct machine learning based price analysis as well as regression, valuation, accumulation strategies and estimated bull target. None of the content is financial advice. Let's get started. This is the open high low close at a weekly candles for Bitcoin. Also having the 20-week moving average, 100-week and 200-week moving average. The analysis points to a breakout away from the 20-week moving average, currently at around 63k. Price of BTC at around 67k. Right now the price is, you can check over here, $67,300. The key levels to watch if the market holds this above this 20-week moving average like it has done for the past 1 2 3 4 weeks. If in this week also the price stays meaningfully above the 20-week moving average or breaks out to the upside, that would again be a change of reversal of the trend. In terms of the other moving averages, the 100-week moving average coming in at around 42,000, the 200-week coming around at $40,500. So those are some key interesting levels to watch in the near future. And now we can discuss a lot about the machine learning based price forecast for Bitcoin. This is the weekly price action at an average level of BTC since 2014. And now that weekly price action is fed to the machine learning model, and the models are trained using algorithms such as ARIMA, XGBoost and LSTM. And the three scenarios forecasted by the model for Bitcoin till middle of March of 2020 or end of March of 2025 are as follows. The base case, by base case we mean, again, none of the content is financial advice. The base case meaning if there aren't any significant bullish or bearish narratives in the market, the likely price action is this pink line. Again, no model can predict the future using what will happen in the market tomorrow. That is dependent on the market forces, but these models can set some expectations based on historical data as a precedent on what could happen in a theoretical bull case, bear case and a neutral scenario. So the neutral case, or without any significant bullish bearish news between now and March 2025, the base case is between 67k and about 77k. So about a 10k range between 67,000 and 77,000. That would be, again, what is 67k now at a base case level would be 77k about 6 months from now. In terms of the bull case, at a non-mania bull case, by that I mean only one standard deviation or 68th percentile bull case, confidence, the price action staying within 70k and around 107k between now and March of 2025. Per this model, 100k valuation early March of 2025 is forecasted in a non-mania or non-euphoria bull case. The bear case, let's zoom in further. The bear case for BTC at one standard deviation confidence level to the downside is between 53 or 54k and 63k. So between 53k and 63k, that's the 10k range. If there are any corrections to the downside, that is a theoretical support at one standard deviation confidence level. If we consider what Bitcoin usually does towards the end of the halving year, like it did in September October 2020, you can see the parabolic rise occur somewhere between October and December. Similarly, during 2016, the parabolic rise did occur end of year 2016 as well. So if that kind of scenario is to be analyzed, the bull case in this case would be at around 95 percentile confidence level and two standard deviation confidence level. That bull case scenario for Bitcoin is between 74k all the way to about 146k between now and end of March of 2025. That is the parabolic or the euphoria case price forecast for BTC. So these valuations that we have just discussed are available in a tabular format as well at the end of the at the end of this um, at this end of this page. We can see that the base case is this column in the middle. To its left are the three bearish scenarios at 1, 2 and 3 standard deviation confidence level: 68 percentile, 95 percentile and 99.7 percentile. The price staying within these bounds is for this week is again at there is 68% confidence that the price does not go beyond 70k 70,525 dollars. The 95% confidence that the price doesn't exceed 74.3k, and 99.7% confidence that the price doesn't exceed 78.5k. So this is how we read this table. The further you are out in the future, the 68 percentile case becomes more and more reasonable to watch for. As in the nearer terms, the 2 standard deviation and 3 standard deviation make some sense, but again over a longer period of time, the 68 percentile case usually does make some sense, unless there is a parabolic move by the Bitcoin or euphoria case. Then this 95 percentile case makes sense. And these tabular values, again you can see, are taking shape between 74k and 146k for Bitcoin towards the end of the year and early half of 2025. In terms of analyzing Bitcoin on its regression based journey, this is the polynomial regression based bands wrapped around the same Bitcoin's price action at a weekly level. If we get rid of all the bands, you would find that the chart is essentially the same, the weekly price action. And on top of this weekly price action, the fair value regression trend line is on a polynomial regression based model is coming in at, the fair value is coming in at around 75k valuation for BTC. That means right now Bitcoin is about 8 or 9k above below the fair value per this model. If we model this even further and say that Bitcoin's move is within the 1 standard deviation confidence level, like it has been ever since the bear market ended end of 2022. Since 2023, Bitcoin has been in this 70 percentile range of range of price action. So right now, if the price were to correct back to the 1 standard deviation bottom, that corresponds to about 46k. Back in 22, end of 2022, that 1 standard deviation bottom was at around 16k. 17k, and the price went about 1000 below this level. Now that 17k, as the asset has matured, that 1 standard deviation bottom from 17k, that has shifted to about 45k. In terms of 1 standard deviation ceiling, which Bitcoin failed to breach back in early March and April of 2024, when that one standard deviation ceiling was at around 74k or 7, and the second second iteration at around 78k. So that 74k and 78k right now, that level, as we have a matured or a matured stage of the bull run, that 1 standard deviation ceiling is now at around 120k. So that means if Bitcoin were to go to 120k, that would correspond to the same level of similar level of move from what Bitcoin did from 23k to about 70. So late in late October, from 29k to about 73k. So that's where Bitcoin is on its regression based analysis. If we were to go and try to make a 2 standard deviation ceiling based analysis, and the last time in the last bull run, price stayed slightly under this 2 standard deviation ceiling. So again, as the asset matures, it would become harder and harder to go to the 2 standard deviation ceiling. For example, in the first bull run, first major bull run, that is in 2017, price exceeded the 3 standard deviation ceiling. In the second bull run at around 2021, the 3 standard deviation ceiling did not do much. The price action did not even go beyond the 2 standard deviation ceiling. So there could be a scenario in this bull run, price action staying between the 1 standard deviation and 2 standard deviation ceiling. Right now the 2 standard deviation ceiling is coming in at around 201k. Again, these valuations are set to either during the bullish phases expand with time, that is the regression based valuation go higher with time, or during the phases where the price is in the bearish phase, they either go sideways or have a slightly lower valuation. Right now again, 200k Bitcoin would be a 2 standard deviation ceiling at this point in time. Again, the likelihood that Bitcoin goes to the 2 standard deviation ceiling gets lower and lower as the asset matures. That's just the reality. Again, none of the content is financial advice. In terms of we discussed the weekly price action. We'll briefly look at the news over the last 24 hours. Instead of reading the news line by line, what our model does that if by reading the news, it classifies them the narratives into bullish narratives, bearish narratives, and neutral narratives. The bullish narratives are in green, the bearish are in red, the neutral are in yellow. If we were to take an overall sentiment score based on these narratives at around 53, that means not too bullish, not too bearish, slightly bullish bias. In terms of the narratives which are gaining popularity over the last 7 days in the crypto market, Bitcoin is definitely one of the most popular narrative. Again, the bullish sentiment is back. You can see the size of bullish sentiment and bearish sentiment differs quite a lot. That means even though there are bearish narratives, they are overshadowed by the bullish narrative. This is again a word cloud based on the frequency of a narrative. That's the size is determined by that. And the reference for this is the content related to crypto on YouTube and X. Also XRP, again, one of the bigger narratives these days. The ETF related allocations, Hedera, one of the other cryptos. So they are also getting some attention, but not as much attention as Bitcoin's narratives. And last but not the least, we'll go back to the accumulation strategies and the bull run estimated target using risk reward approach rather than machine learning based approach. So this is the third way that we analyze Bitcoin. Again, this is the simple moving average. The risk color coded, the price is color coded based on the proportional difference between the price and the 20-week simple moving average. Right now, per this analysis, price at around 67k represents a risk level of around 45%. That means 45% risk, 55% reward. The key idea is whenever again, for example, in June of 2022, the risks for accumulation where the risk levels were close to zero. They're not quite zero at any point in time. They're rounded up to 2 decimal points. That's why you are seeing 0.00. At that point, when price was sub 20k, the reward was are almost 100% and risk was essentially 0%. Although the price did go about 4 to 5,000 lower than this level, per this model, again at 19k BTC, this model said that it was a great time to accumulate. Right now it's a 50-50, almost a 50-50, and that means 50% risk and 50% reward, right? Quite similar to what Bitcoin risk level were back in April 2023 when the price was at around 30k. Then again, Bitcoin went 2x in almost a year from that point in time, from April 2023 till about March 2023. So that's where this model is kind of useful. The second model is taken based on the polynomial regression analysis, the rainbow chart that we just analyzed. Using the same logic, what this model does is sort the price action of BTC at a daily level based on risk level between 0 and 1. The key idea is whenever the price is significantly lower than this fair value regression line, that's the best time to DCA. Again, not an ultimate bottom, but again provides a range where DCA makes more sense. Again, you can see over here between 0 and 0.1 risk. That's one of the better times to DCA per this model. Again, not too long ago, again about 7-8 days ago, when the price was at around 62k, this model would have said it's a buy per this model. Right now, per this risk levels per this model are at around between 0.1 and 0.2 risk. And the purpose and another utility of this model is, again, it identifies what would correspond to at this point essentially a zero risk or close to zero risk BTC if the price were to be at around 19k. Again, quite a few distance between the current price and the risk level, but that is essentially the purpose, to color code and also to quantify the price in terms of some of the key risk levels between 0 and 1. If today the price is close to this 0.25 risk price at around 67k, is between this 0.2 risk price at around 59k and 69k. That means at this point in time Bitcoin offers 25% risk and 75% reward at this point. If the Bitcoin per this model were to go to about $217,000, that would correspond to the maximum risk. But again, everyone has a different risk tolerance. Again, whenever this price action goes to this to the shades of green, so moves away from the shades of green to about shades of red, like it would eventually do when the price is between this 0.5 and 0.55 risk, at bit price action between 118k and 128k. That's when, again, personally speaking, that's when again my ears would be to the ground to look for any potential peaking scenarios. Again, no model can predict what price action could do, but again, in the future, but it's always a good exercise to kind of base your expectations based on some historical risk precedents, as well as some of the price action based metrics. So this is the DCA model, again one of the one of the popular ones. And the last and not the least is the time weighted average priced model. Again, considers the price of Bitcoin and its relationship between the price and the time weighted average price. The time weighted average price for Bitcoin is around 18k. Again, Bitcoin rarely spends any time below this price, but the relationship between the price and the time weighted average price offers insight on how risky Bitcoin is at any point in time. Per this model, the risk associated with major DCA related to Bitcoin is at around 78. That means 78% risk, 22% reward. Again, this model does a fair job whenever the risk for accumulating BTC is less than 0.5 per this model. That's where DCAing makes the most sense for BTC. Again, that scenario was definitely during the bear market capitulation around June of 2022, between June 2022 till March 2023. Again, this is some of the other use cases of the model to identify bear market bottoms. In terms of now, if we were to summarize everything and create a bull run forecast or bull run peak estimate based on the three risk levels that we analyzed, the regression based risk or the DCA model that we analyzed, the time weighted average price, the 78% risk level, as well as the SMA based risk level at around 45-46 risk and 54 reward. If you weight those risks based on the three models, the weighted risk is at around 0.37, roughly speaking 1/3 risk, 2/3 reward. And per this risk reward approach, the bull run peak estimated is at around 170,000 BTC sometime in 2025, and the reward from the current price is around 2.5x reward. And this reward also helps set expectations. Again, this is not financial advice, but again does helps us do a comparative analysis on relative risk reward for cryptos other than BTC. You can see there are most of the cryptos essentially have the risk reward in the range of what Bitcoin is offering. That means if the risk and the reward are lower than what Bitcoin is offering, then at any point in time that it doesn't make sense to hold that crypto as opposed to holding Bitcoin. So again, this is again just one personal preference. Just wanted to highlight that before we end the video. Hope you enjoyed the content. If you did, please subscribe to the channel. Also give this video a like, and hope to see you again tomorrow. Thank you and have a nice day. Bye bye.